The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Darrell Martin.
Welcome, folks. Tommy O'Brien. We do appreciate your growling and prowling with us out here. Right now, we have the Dow Industrials up 18. The Nasdaq is down 33. S&Ps are up 3. We have the... There she is. Okay. So we have the gold contract down $4. Silver's up 22 cents. You got the oil market up $1. Notes are down 5 ticks at 129. The bond is down 9 ticks at 162. And good old King Dollar's up 286 ticks. And folks, if you haven't test drove the Nadex platform, great time to do it. We got, you talk about volatility, Tom, right? I mean, it's all over the place,
That's
folks.
for sure.
It's all over the place. So as you come over to our website at TFNN, God bless
Excuse me.
You can hit the banner on the top or the side, bring up the Nadex platform. They'll put $25,000 of paper money into your account. You can keep using that over and over again so you can get used to these contracts, see how they trade. They're defined risk contracts. And if you're trading the metals, folks, if you're just listening to Larry, silver yesterday traded $1 up and down like in a heartbeat.
Come on, how about the indices, though? The NASDAQ 100 moved more than 1% in 10 minutes after the closing bell yesterday.
That was a beautiful thing.
In the right direction for you, too.
In the right direction. There's no doubt about that, man.
I'm sure we'll go over that, exactly.
We're going to go over that, and we're going to go over, because this morning, too, I was mentioning to Tommy when we were just getting on, the weightings inside the NDX 100, folks, if you trade the NDX, or you want to, you really want to wrap your head around them, because at certain times in the marketplace, you can get an edge. And we're always just looking for that small edge. You know what I mean? Where's that small edge, okay? Because, as you say many times, the small edge over a long period of time, the year, is going to make a difference.
For sure.
And even if it happens 2 or 3 times a year, and it doesn't happen a lot, but it happens 3 to maybe 6 times a year, that the actual equities, and this, I was saying to Tommy this morning, this happened prior to the open this morning. You had Microsoft that was still down, you had Google that was still down, and Starbucks was still down. I mean, there's a lot of others, but those ones here got decent weighting structures. Well, guess what? Those were still gapping down pre-market, yet the NDX futures were up 3 points. And I'm saying to myself, man, that is whacked out because of the structure. Now, I was still speculating for sure, okay? Because there's 80%
more weighting that you haven't looked at.
That's correct.
Just, you're explaining this to me beforehand.
Right,
but,
no, I definitely, but so the bottom line is that I sold it, okay? And sure enough, at the open, it corrected itself. But that's still a speculation. But understanding that, you get an edge,
Yes, you should understand the weightings if you're trading the index of anything.
Right.
No matter what. No matter what.
And what does happen in the NDX 100, it's more skewed.
They're big impacts.
Yeah, they're whacked out.
Right. You should know the leaders,
the first 10 are pretty whacked out, man. Do you know what I mean? So, I believe we got a call. Let's see. Let's go to Mike in New York. Hey, Mike, what's going on?
Hi, Mike. I'm calling regarding, I'm looking for a biotech index, LABU, and wanted to know what do you think about this, and what are the main holding for LABU? Okay,
so... first of all, I'm going to tell you not to buy it, okay? But let's go through it. It's LABU. This is the direction, 300% bull position in the biotech index. So the reason I would say not to buy it, if we go over, well, here, let me give you the indices, too, as to what is it. Let me see. Well, LABU, I want to make sure of this, because this is a little bit different. This is the S&P Biotech Select Industry weighting structure. Yeah, so the weighting structure is a little bit different, because I know that this is a direction one, and they couldn't use the Nasdaq biotech. They couldn't actually copy it. Okay, so it has the
the S&P Biotech
Index
Fund.
It's the S&P Biotech fund. Now, that being said, if we just go over to the IBB, just to give you an idea, it's going to be close to this,
yes,
okay?
That's what they're trying to mimic.
Right,
but
exactly. So you get Gilead is 8.3%, Amgen's 8.3%, Celgene's 7.7%, Biogen's 7.4%, Regeneron 7.1%. And the reason I'd have you stay away from this right now, Mike, is that it looks to me like this could be the beginning of a little pullback. You come off the bottom, and this come off the bottom nice, folks, okay? But guess what? You're coming right into your swing points that were generated out there from the 12th of January. And we came down with 3.9 million shares, 3.7 million the first time up. Now you were at 5.9, which is great. And then you tested that with 4, which is good. Then we tested it with 2.8, and then today's going to be lighter. So I would wait and see how it comes back and test. I mean, this can come back into like 253 and see how it tests that. If it tests with lighter volume, then you get a consolidation setup, that you could basically buy it at that point, and then you're trying to sell it at the 287. But right now, you're talking to a bear in the marketplace. We put this on the weekly, too. You're going to see on the weekly, this doesn't have much. This is an index that's down from $400, and looks to me like it wants to go to lower price. Thanks, Mike. Have a great one, man. Have a safe one.
Thank you.
Dow right now is up 20. The Nasdaq's down 38. S&Ps are up 350. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow up 11, Nasdaq's down 41. They're hitting Nasdaq pretty good. S&Ps are up 250. And if you haven't test drove the Nadex platform, folks, it's time to get over there, test drive that platform so you can see how you get defined risk trades. And why don't we pull this over? Because I want to show you this morning. This gets kind of interesting how this works out. So this morning, a gift from the trading gods, well, I felt it was a gift from the trading gods, right, is that the NDX was up. And, you know, the market, Microsoft, Google, Starbucks, they were all getting hit pretty bad last night, so they were trading down.
Yep.
But watch what happened here is that a risk versus a reward, right? In the end of the last 2 days, I had sold the 80-point spread, right?
Yes.
Well, when I went to look at the 80-point spread this morning, the risk versus the reward didn't seem worth it because it was on the other side of the...
You wanted to sell it, so you were probably too close to the floor, right?
Yeah,
the bottom.
Exactly.
You didn't have enough profit potential.
Right.
Yes.
Right. I was risking more than I wanted to, right? But then what I did is this, if we can bring both of them up, I went into the 40-point spread, and then my risk versus my reward, I felt went up. So I'd like to kind of have you run through this, just so I could see because I just basically did it.
Sure. So I can see right away that the master spread, right, is 44.60 to 45.40.
Right.
So you get 80 points. The middle of that spread is going to be 4,500.
Right.
We're at 44.60 right now. Now we're down substantially from when you probably would have initiated this.
But we're going to be able to tell, if we look at the other position first,
44.86
of what time I put it on. You know what I'm saying?
About 8 in the morning.
Yeah. Because when you see this, folks, okay, this is really interesting in the context of what spread you want to get, right?
Sure, definitely.
Okay, so on the master spread, is that the master you got up there?
This is just a chart.
Okay. Okay.
So yeah, basically, you know, there's options of 40 points versus 80 points, and it looks like your spread goes just from 44.60 to 4500,
right?
As opposed to the master going from the same floor, 44.60, to 45.40, 40 points higher.
Yeah.
So with having only 40 points, it looks like the market was trading at about 44.90, and you were able to sell it at 44.86. So with that, you're risking like $138, which is the risk from 44.86 up to 4,500.
Yeah.
Right? So, you know, that's a 13.8 point difference. Each one's 10 points, $138. And then it's going to be, because it's a 40-point spread, it's going to be $400 total.
Right.
So what is that? 138, 262 is your profit potential?
Yeah.
Yeah. And so that's the trade you had set up. And the floor, your max profit's 44.60, and, you know, this is a perfect example. So it's trading at 44.60, the index.
Right.
Now this is going to have some premium in it, though. Like, you can't just sell it at 44.60, and this is a good, you know, we're almost at 44.70.
Right.
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 So, you know, something that you want to be evaluating right now is you're risking $3 to make $1, just as it goes. I mean, you're risking $3 for every dollar that you have in profit potential remaining. So for that, you know, $400 spread, you're now risking $300 per spread.
Now let's do this. I wanted to show them the difference. So I was risking 138 to make 262.
Correct.
Now can we do the 80-point spread? Because I want to show you something, and I'll show you why I didn't do it. I want to make sure the math was correct.
Sure. So this is the 80-point spread, which is now trading at a similar range.
But let's go back to 8 o'clock so you can.
Sure. Well, we have where the index was at.
Right.
But okay.
So then you know what I'm saying? Can you put that in the contract so I can show you? Because
I'm not sure what you're asking.
Because I'm trying to show them that I was risking way too much.
It's tough to know exactly where that premium was at that moment, if that's what you're asking.
Can't we just go to the exact? I did it the exact same time. Can't we just go to?
But you traded the smaller contract, correct?
That's correct.
So what are we going to be able to see for the larger contract?
If we put in what the bid was, with one, it's going to be my maximum loss versus my maximum profit.
I see, but the bid and offer for this contract is not going to be the exact same as the smaller contract. They're going to be vastly different because of the different ceiling.
Okay.
Right?
Right.
That's
so
why
I should have. Okay, so
yeah, that's my. You know what I mean?
Yeah,
like,
I do. So what it was, folks, is this: is that I was risking
sure.
like
we can get somewhere close, but that is a big facet of what people have to get used to.
I was risking way more. It was way over 50%.
Sure. So you would have been selling it. You would have been selling one contract.
Yeah.
And let's say if the market was at like 44.90. Well, you know, the best way to put it is that you would have been risking
It was. I think it was 44.92 or something.
I mean, that's close. It's just, you know, that
it was less than that. It was like 4 something.
This is all just guessing.
No,
you know,
no,
that's where, you know, it.
But it's skewed.
Well,
to me, it
that's
was.
That's where when Mike called and he's talking about the middle of the spread being important.
Right.
You're selling it and you're in the bottom portion of that spread. Well, right away, you're going to be risking more than your max profit potential because there's less room to go down than there is to go up, and you're selling. So there you go. That's where
it was somewhere around like the 44.92. So I was going to risk $472 a contract to only make $328.
Yes, yeah.
And then I just went up to the next one, and the difference is I'm only risking $138 to make $262.
Yes, for sure.
It's pretty wild, man.
For sure.
Yeah.
All right, we got a couple calls.
Let's go to Mike in Toronto. Hey, Mike, what's going on?
Yes, good morning. Thanks for taking my call.
Sure, man.
I'd like to take a look at mmp.un-T on Toronto. It's Century Select Precious Metals Fund.
PCM. Let's see what we got.
I'd like to see it on the monthly. It's a closed-end fund of TSX junior gold miners.
Well, there she is. Okay, so it's okay. A trust seeks to provide long-term capital appreciation, pay monthly cash distributions. The trust will invest actively managed in an actively managed portfolio consists of primarily of equity securities of metals and mining, exploration issuers listed on a North American. Okay, so inside this, so Detour Gold and Klondex.
Samafo.
Yeah, Samafo's down there at like 5.6.
Yeah.
Tahoe's 6. Mandalay is 6.6. Silver Wheaton 7.2, and Primero's 7.
Okay.
Okay. So what do you want to do with it?
On the monthly. Could you take a chart on the monthly, please?
Sure. Okay. Are you buying it, selling it? What are we doing?
I'm long it. If you could scroll into December 2010.
Tell me what you want to do. What are we looking for here?
Do you see a high volume high in December 2010?
2010.
You got to move the chart back.
Okay.
Okay.
Right there.
Yeah. Yeah. You know,
Looking
this,
for a retest then.
well, that's. Hey, just stay with us. We'll go through this because that didn't take out the high. That's but it's not a bad looking deal. You stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We'll be right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solutions CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with Mike from Toronto, and we're talking about precious metal fund. So, Mike, when you look at this, you know, what you have going for you right now is that you're in like an ABC up anyway. So your A point on is 146.
It's going January 22nd of this year.
Yep. And your B, I'm going to take this one here, it's 224. So let's say I call it $1. Your C is 196, which gets you 296. So that's where you are thus far.
Okay.
The high volume, now this gets a little bit tricky in here, and this is what it is, right? See, the spike in November went to 1211. And
November of 2010, right?
Yeah, November 2010, you had 1.69 million. And then did 2.9 million into 1187. The way I trade this, I would see first off how it handles this 247 on the monthly, because that's where you are right now. That'll give you a decent indication that okay, it's going to have enough strength to get up into your next swing point, and then you go from there, man.
Okay, I'm just curious on the Bloomberg terminal there. Is there heavy insider buying?
This doesn't even have any volume on it. This what you're giving me.
The insiders, like, are the managers buying? I'm always looking for any clues.
I don't believe that's how this one will work. We'll find out. Let's see.
He's a smart guy. The manager won the Lipper 2008 award, gold medal, for top performing fund back in 2008.
Yeah, no, that's not how what happens when I pull this up. That's just not how it works inside a fund. Meaning that, like when I pull this up, security ownership, the only one that shows up is.
It's basically giving you nothing.
Yeah, it's a fund.
Nothing, eh?
Yeah.
Okay.
Have a great one.
Thank you very much.
Have a safe one.
Thanks, Mike.
Let's go to Tom in Plymouth. Hey, Tom, what's going on?
Hey, good morning, Tom. Tommy, how are you?
Morning, Tom. Happy Friday, man.
Happy Friday.
Hey, happy Friday. Hey, I'm looking at the UGLD, wondering what you think about an entry point into that.
UGLD. So this is the velocity shares 3 times long gold. Okay, so let's see. Is it long the actual cash payment schedule maturity based on the performance of the underlying index, which is the GCI Gold Index. GSCI. Gold Index excess return.
Which is some S&P fund, it looks like.
Yeah. Do you know what this is by any chance?
No, I really don't. I haven't really played it, and it just seems to be. I've been watching it, and it hasn't been moving all that much. But I was just thinking.
I guess my question is, I don't know if this is like the metal or it's the
Can you
equities.
try GSCI and see if that pulls up?
Yeah, it almost looks like the metal because it hasn't moved. GSCI. Oh,
yeah.
GSCI. I'll make it. Oh, I know what I'll do. I'll do the index. 1 second. GSCI.
No, it's not it. No.
You know, what I would do, UGLD. What to do first, Tom, is go to the Velocity Shares website and see what this is.
Yeah. Okay. Yeah, that sounds a little more reasonable, I guess, than just jumping in on it.
Just because it looks like, even though it says S&P Gold Index excess return, it looks like, just because of the way that it's been going sideways for a month, it looks like the actual gold contract, but you want to know before.
No, it does. It jumps around from the open to the close, which would be the same thing.
Right.
Like it's closed while the metal's trading, but still.
Yeah, I jumped out of the USLV yesterday, maybe day before, like you told me to. I got rid of half of it the other day, and then the other half the next day, and then it went up and went down, and it's like, ooh, this thing's pretty volatile. But,
that was a heck of a ride yesterday, man. That was about as intense as I've seen, period.
Yeah, I think I got out yesterday morning, I guess it was, real early. I got out in the close because it was up again, so I said, getting rid of the rest of it, so out I went.
Good for you.
Hey, listen, we have plenty of time. You know, folks, if you're worried about that you haven't got in this, there's going to be plenty of time. I think we're at the beginning of just a real run. You know what I mean? And if that's the case, it's going to be a couple years, you know? So don't chase these things at high prices, man. You know,
and I'd say, especially the way you're trading it, Tom, all you need is some volatility, and that's definitely going to be here, whether you think it's going to the moon, like, you know, that's the moon. But no matter what, I'd say volatility's here for a good period of time.
It is. Yeah. It is. And inside the commodity markets, it seems like, I said this to Andy Heck yesterday, he was talking about, it seems like volatility's, I've seen for 30 years, the volatility inside commodities are vicious.
There's a lot of currency volatility contributing, and the interest rate volatility contributes to the currency rate volatility, and which is the commodities.
And they come out of nowhere.
Right? No.
I mean, it seems like it comes out of nowhere.
You can't really predict it. It doesn't take much. So
it doesn't take much. So take that money off the table, man, and go groove.
I'm in all cash right now, so maybe I just sit tight and wait for that USLV. I mean, that's.
I think you know what I think you should do. It's a Friday. You should get your wife. Go down to Plymouth Harbor, sit on that deck. What's the name of that restaurant? I love that. He's the restaurant in the harbor, man. Sit there and have a nice beer and look out over that harbor. That's
not a bad thing to do. She's out at, I think, 1 or 1:30. Maybe that's the thing to do today.
Call her up and meet her down there, man.
Perfect.
Totally. Time to play a little hooky. Have a great one, man. Okay.
Thanks for the invite.
Thanks, man. Bye-bye. Just like I was saying to you, we were just coming into work, folks, and what happens is that the weather's gorgeous here right now. But I said to Tommy, he says, I got to get out of this place for, a couple hours because you can feel the heat, and like in a couple weeks, it's going to be like too hot to walk around.
We're coming into our version of Northeast winters, and we got it made. In terms of 100 degrees is not the end of the world compared to snowstorms and snow and all that. But guess what? It's pretty intense, like we know it is. When you walk outside and the humidity with the heat, it hits you, man. It is. Glasses fog up instantly. You're sweating by the time you get to the car.
Totally.
But hey, thank God.
And we really got
air conditioning.
6 or 7 weeks for that. But right now, it's like perfect.
Yeah, right. No. We have a little time. But guess what? We're coming into May.
Yeah.
And everybody knows, no matter where you live in the Northeast, too, hot weather's coming in May, June.
It is coming. So let's get over and take a look at the NDX first. Because this, NDX is not only the leader, but it's getting hit. So Microsoft is the leader on the way down. That's down 450. That Microsoft is an 8.41.
Down 8% to put it.
Well, check this out.
I love percentages, man.
Yeah.
You know, when I hear down 450, I don't know what that means, unfortunately. But it's,
that's good.
Down 8%.
So watch this. It's down 8%, and Microsoft is 8.4% of the NDX 100.
For sure. Now, it probably won't be that same percentage tomorrow, though, will it?
No, it won't.
Yeah, that's
it won't. It won't.
Yeah.
And the way, the quick, dirty down way, folks, just to get percentages, just pull up every morning NDX weightings, right? And about the third one down. In fact, I'll get you the site. They're about the best I've seen. They change every day.
Okay.
Do you know what I mean?
No,
it's actually better than my
I was Googling it myself.
It's better than my Bloomberg.
It's not the top search if you Google, like now
right.
it's like 100
It's like
weighting.
3 to 4 down.
But just make sure you look at it. Make sure you look at the date. And the one that I found is probably the one you're talking about that says updated daily or something like that.
Right.
And I happened to look at it even this morning because I was curious.
Right.
And it was, they were different, of course, from when you put them in yesterday after
yes.
Market Insights.
Which is good.
Yeah.
I know.
As they should be.
As they
That's
should
how
be.
I knew it was real.
It's important.
Yeah.
Exactly. You stay right there, folks. We'll be coming right back. Dow Industrials right now. Where is she? Down 19. Nasdaq's off 54. S&P's are down $1.50. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Our phone number is 877-927-6648. And folks, if you haven't test drove the Nadex platform, great time to do it. Come over to our website, and the volatility we have is just in spades.
We got a little spike down going right now, even as we talk.
We
Go
do.
ahead.
And look at that baby, man. And you want to trade, and you want to put up least amount of money with a defined risk. This platform is a great platform to do it.
Let's go over what we were just talking about during the break.
So
right?
check this out.
You traded in 5 contracts, right? So each contract has $400. Think of the pie, right?
Yes.
The pie is $400, which is 40 points, 44.60 to 4,500. You got in at 44.8620. You're selling it. We went over. You're risking 138 to make 262.
Right.
262 is if this expires at 44.60 or below, bottom of the box.
And right now, we're 20 points below that.
20 points below. So this is what we were just talking about, though, is that this is a 40-point spread. This is an all-day spread. You have a lot of time left. There's going to be some premium in here for a good duration of time if this market stays anywhere near this spread, as in if there's a probability that this is going to trade back into the spread throughout the day.
Right.
Nobody's going to be on the other side of the trade, because right now, if you wanted to, right now you're basically per contract risking about $350.
Yep.
Because it's trading 5 points above.
That's right, because my value is $17.65.
To make that extra 50 points, which is the extra 5 points that's still in the market. And as we're talking, that 5 points is even continuing to disappear as the market goes down.
Right.
But that's where you just want to make that decision. What I say to you, right? It doesn't matter what you want to do, but you just want to have all the facts. And that's the fact, where right now you're risking almost $360 per contract. So do you want to be on this side of that trade, absorbing that premium, right?
Right. Right. No, I said to Tommy, he says, I want to get another contract and sell more. But that's
as you get really close, and we've brought this up with Darrell before. This market will disappear, and it might make sense for you to get out. And this is where you can put your put your bid in, even like 0.5 above where the bottom.
So let's do that. Let's put the bid in. We'll buy back 5. At 44, just do 44.62. Big deal. So I give up. Because the difference is, folks,
you're only giving up, just to put $20 per contract, which even for 5 contracts is $100.
Right.
So at that point, your position value would be $1,900.
Right.
And you'd be having that $1,900 on the table to only make that extra $100.
Which makes no sense.
Nobody would. Now people do, but I'm guessing 99% of the people out there, including yourself, would not initiate that trade.
No.
So guess what? When you decide that, get out of it. The same, for sure.
And it's a Friday. So I can go.
No, it's, hey, listen, no matter what, though, that type, and Darrell's went over it, and it's a great strategy it is. And look at it, we're coming down. We better get it in. So we're going to put a 5. I'm going to put you in even at 0.2.
Okay. Perfect.
Because for $10, which would be the 0.2 times the 5, we'll get you out of that trade.
No, that's right. And so now we can watch it. Let's look at it, because that trade will be up there now too, folks. There it is right there.
And so you can see that, this is really tanked. This has come down almost 20 points since we had this conversation at the last break.
Right.
So it's great we brought it up, because you can see how really close we are. We're 0.7 of a point away from being the bid.
Right.
And we're 1.1 points away from getting our trade executed at being the offer. Now, what we talk about, though, this is not going to move point for point, as in we're 1.1 points away.
Yeah.
And we are going to need, and that's where you want to get used to how the premium reacts on these, right? But it's going to be a lot more than 1 point of the index move.
It is.
That's for sure.
And what I've found, I need another spike. If you get a quick spike, that's when it's pretty
it could
cool.
Happen for sure. And even, it could just be 5 quick points. It could be, if this gets down to 44.25 maybe, and that's where it's just going to have different moves.
And then the time will go with me too.
Time will go with you too.
Yeah,
if it just stays where it is, if it just stays. Now, it's right now 26 points below the floor of that spread.
Right.
So, as time goes and decays, even an hour or two, this is going to tick down closer to the bottom of the spread.
Right.
Because there'll be less time premium within there.
Gotta love it.
Gotta love it.
Gotta love it.
A good couple trades with some volatility, man, for sure. And
well, then in the trade, let's talk the trade and the close yesterday. We were talking about this yesterday morning. So yesterday morning, folks, okay?
And look, we'll just pull up the chart and you can see the 4 p.m. But keep going.
Well, Tommy and I were talking about this yesterday morning because Google was coming out with their numbers, right? And so when I was on the air yesterday afternoon, at 3:57, I initiated this trade of selling the NDX 100.
Yes.
and I sold it 6 points out of the marketplace, out of the...
So I remembered exactly. So here's the 4 p.m. bar.
Okay.
So to put it, we have it up here. This is the 4 p.m. bar. So you were in it before this.
3:57.
Right?
3 minutes.
You're in it right here.
Right.
And the market's trading at about 45.35.
Yep.
Okay. You chose to sell a spread with a ceiling, and we'll put a little line on here to make it as easy as possible, because you were in at about 40. The ceiling was 44.25.
Yep.
All right, and the floor was 44.95. You had a 30-point spread.
Right.
All right. Now this is perfect. You're talking about the ceiling, the floors, everything being visual. So you're up here. Now you're completely out of the money, which means there's no value, no intrinsic value, right? You're completely out of the spread.
Exactly.
But because of that, of the 30 points, so same deal. We were just talking about 40 points, $400 pie. 30 points, $300 pie. Right. Everyone. And the market at that point was trading at about 2.8 points within the spread. I think it was 45.22 about, where you're risking about $30 per contract.
That's right. I risked $87
for three contracts.
Right.
So we'll just call it $30 per contract, which would mean you were in about 45.22.
Right.
You're selling that spread. So you lose your entire investment if it expires above 45.25.
Big deal. Right.
$30 per contract.
I know. Yeah.
And you can see what happened. I mean, it was a great trade, and you actually got almost the full value of those contracts. I think it had expired, and you can see the bottom bar is in the 410 bar, which is this third bar, closes at, we'll pull it up, 44.9668. So you're $1.68 above the floor, which is $16.80 that you only taken off the max profit of the $300 value per contract.
Right. And that had to do, just so you understand, that's understanding, well, I was saying I felt that Google was going to go south because it was coming up with lighter volume, and Google had such a large weighting, and so did Microsoft. But I didn't think Microsoft was going to go down. I thought that was going to be flat. I was just banking on Google, actually. And bottom line is that's where you can...
Bottom line is they both came in for you.
I know. Yeah. That's what was so crazy, man.
Yeah.
And what happened, folks, so picture this. Tommy's right beside me at 4, and what had happened is that the NDX, remember, ticked up first before...
It did, and you can see that actually at the 4 o'clock bar that it opens, and it does. It ticks up almost 10 points. It rises above 45.43, right? And then within the span of 10 minutes, so by 4:10, it was down 50 points from that level, which is over 1% move on an index.
Right.
So, you're not going to get 10-to-1 risk rewards, but you know what? If you are on the side where the index is going to move 1% in 10 minutes, then you should be rewarded, as you were.
And what happened, and just so you understand something, that I had other trades on it, so I said, okay, what's $90? You know what I mean? So it wasn't like, you don't have to go overboard with that. Do you know what I mean? It wasn't like 10 contracts.
I keep going on it. The best way to think about it is per contract. That's how people just can understand.
That's how I'm going to think.
How are you? We had this discussion last night. We're back on 3. I don't know what's going on.
No, I'm going to go back on 1. I'm going to go back on 1 contract. Okay. Just so I can...
Sometimes we're on 5, then we're on 3, then we're on 1.
No, I'm going to stay on 1. So we can all understand the price structure here.
It's all a piece of the pie, and that's what
it is. No, it is.
For sure.
You stay right there, folks. Tommy and I are coming right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. you get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And you know what's? I just was looking at that headline coming across. What's kind of interesting is that
What headline?
if we go over to the we go over to the oil market.
Yep.
You know, oil's up, but guess what? It's not helping the market. You know, oil, it's up 93 cents. You know, and that's unusual.
Yes.
That's a little change, man.
Yes.
You know, that's definitely a change. So let's go take a look and see what kind of volumes we have here. So you get 260 million NYSE. That's light volume. On the NASDAQ, we're at, the NASDAQ's got some juice, 593. So if we look at the Qs just for a second, the Qs, the Qs have done 15 million already. Yesterday we only did 20 million. So the Qs are coming into a swing low of $108 and 1 penny. At 28 million, it looks like it's going to blow that away, man. So, you know, you get some selling here, man. You're coming down, you get some selling.
Sure. Microsoft and Google, they're at it.
They're huge, man.
Yeah.
They're huge.
Yep.
Oh, I know what I wanted to talk about. Inside the numbers yesterday with Google, right? The numbers, folks, okay, were indicating that their advertising was going down. That's why it's flipping out. And I was talking about that. We used to advertise on Google, but now we advertise on Facebook. Facebook is the number, man.
Oh, for sure.
Yeah.
That money doesn't come out of nowhere. We talk about pieces of the pie with Nadex. This is a piece of the advertising pie. And
right.
When a juggernaut like Facebook basically takes over online advertising almost overnight, as they're trying to,
right.
I mean, that's coming from somewhere,
right.
for sure.
No, and
it's probably coming from a majority of Google. They're the biggest players.
That's
so
where ours come from, right? Even though it's a couple $100, that
no matter who
think
you
about
are.
that added up.
No matter who you are, right? Every agency, Google's the biggest player. So if anyone's going to be losing market share, the biggest player in the market has to have the most to lose.
Right.
Yeah, that would.
You know, so that's.
If it used to be you don't want to compete with Google, right? You wouldn't want to be competing with Facebook, right?
No.
And I think that's changing. But
I agree.
Talk about whether it's that, and then they have Snapchat. We talk about where just the younger generation.
That's huge.
You have WhatsApp, which in Europe is just the main way that they use to talk. And then you have the virtual reality stuff that they're deep into, Facebook.
And that's
so
just
not just, and we're just talking straight about Facebook. And that's just the beginning of, just kind of like Amazon, their retail is like the beginning of actually how they make money and what they do.
Changing everything.
Exactly.
Yeah. The changing everything is pretty intense, man. There's no doubt.
All right, let's take one quick final look at what we got going, and we're bouncing a little bit, so you're going to be a little away from where we're at. But here's your bid, of course.
Yep. I'm trying to buy it back at 62.2.
And you got a couple points, but what's nice is if you do get that spike, you're down there. And you're still more than 20 points away from the floor of of the spread that you're
Right.
in the index. So
And
you can keep your eye on this, and you can still get out of it at some point if you want to.
And realistically, the way that just looking at the volumes on the Qs and the Index 100, to me, that's going to stay down there. So, I definitely keep my eye on it because I don't want to lose that $1,000 that I'm up right now.
Right. And I'm sure if you see another trade where maybe you want to use that capital or even not, then take it out or just because it's always to consider if that capital is going to be tied up all day, that's another value to consider.
No, it is. It is.
Depending on what. But like you said, it's Friday.
As Jay says, take the money and run. It's Friday. I know.
Hey, it's Friday. It is.
We'll see how much.
Keep a close eye on it.
Yeah, we'll see how much patience I have once we get off the air.
That's how it goes. Go hit that button. Totally.
You know what it depends on, folks? It depends on whether I want to get out of here for a couple hours before I go back on the air. That's what it depends on.
I hear you.
We'll see when we look out that window.
It's a beautiful day in Florida, man.
It is a beautiful day, man. You stay right there because our man, Mr. Basil Chapman's going to be coming up next, growling a problem with you. And then, of course, Steve Rhodes, Dave White will be back this afternoon. And, of course, don't forget, folks, you can get us 24 hours a day right on your cell phone, TFNN.com. Hit Tiger TV. Have a great one. Have a safe one. Thanks, pal.
Thanks, man.
Wow! And, folks, over the weekend, practice on that Nadex platform. You're going to love it. Be right back. Basil's going to be right back.
There you go.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.